Happy Friday, traders. This is Dollar Market Analyst for City Index. Today is the 17th of October. So markets are quite volatile and equity indices have fallen sharply this week, but could they bounce back? Along with the other major indices, the German DAX index has had a poor week this week as sentiment turned sour. But now the index is testing a potential area of support here around 23,700 or so, where previously it had staged a breakout from around that area. So it is a demand zone, if you like, or a key support area. Can it hold given the bearish risk sentiment at the moment and negative headlines regarding US-China? Well, that's a key question. From a purely technical point of view, I think a bounce should be expected, as we are seeing at the moment here, given the extent of the drop. But we'll take it from one level to the next and see how things will look once it arrives at a key area of resistance, for example, at 23,950, which is this red line here, where the index had formed some support earlier this week before breaking below it. So if it were to go decisively above that area around 23,950 to 24,000, I think that would be a positive outcome from a purely technical point of view. And in that case, we could potentially see continuation towards 24,300 next. And then if it were to break back above that area, then that would be a clear technical bullish development for the German DAX index, in which case that could pave the way for follow-up technical buying towards the 25,000 psychologically important level next. I've written in my report with the link shared in this video why the German DAX index is headed higher in the longer term, and that has more of fundamental reasons why I think that. So if you're interested, please have a read through that. But looking at the technical levels again, and on the downside, if the selling continues, then this shaded purple area will come into focus next, where the DAX had previously found strong support and resistance in the past. This is at around 23,280 to 23,480. It's a wide range, but we've tested this area on a number of occasions in the past, and so far it has held. So the fact that we've had an interim higher high here, following the last test of this support area and the clear breakout from this zone, my overall feeling is that we will probably not drop all the way to test the zone once again. But if we did, then in that case, the chances of a breakdown at this, at the third time of asking, if you like, would significantly increase. But that's the alternative scenario. My base case scenario is that we'll see a bounce and a push back towards the highs. The euro dollar this week has broken out of a falling wedge continuation pattern, which is technically a bullish sign, and it has, for the time being, found some resistance at around the 117 handle, which is bang in the middle of its existing range. Nevertheless, the breakout suggests that in the coming days we could potentially see a continuation to the upside with 118 and then 119.18, the September high, could be the next upside targets, with 120 being the main target for me for the euro dollar. On the downside, this shaded green area between 114.60 to 115.50 area, which was previous support and resistance, is the key support zone to watch. Given the bullish breakout from the continuation pattern, you wouldn't want price to come all the way back down to this area now, because then that would suggest the breakout was a failed one. So assuming we can hold above the resistance trend of this continuation pattern by the close of play today, I think that would be a bullish sign, everything considered. So keep an eye on the euro dollar, because I think the fundamental backdrop is a bullish one, I think, with the German stimulus to hit in the coming months, and the ECB is basically done with cutting interest rates. There may be one potential interest rate cut next year, but compared to the Fed, the ECB is more hawkish, whereas the Fed seems to be on the verge of cutting interest rates once again this month, before delivering the final rate cut of 2025 in December. For more market updates and insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.